All right, welcome. If you're running an HVAC business and you feel like you're just guessing with your finances, you have come to the right place. Seriously, we're going to talk about how to stop stressing about money and start taking real control. Let's get into it.
This quote, it just hits the nail on the head, doesn't it? Running your business without tracking the key numbers, you're flying blind. I mean, think about it. It's like trying to fly a plane with no dashboard, no idea how high you are, no clue how much fuel you've got left. That's exactly what it feels like. So today, we're going to build that dashboard for your business.
So let me ask you this. Does a full bank account mean your business is profitable? It's such a classic trap, right? You look at your checking account, you see a nice, healthy balance, and you just kind of breathe a sigh of relief. But is that number telling you the whole story? The answer is a hard no. And honestly, believing that it does can be one of the most dangerous mistakes you can make.
All right, so first things first, we have to know our numbers. We're going to go from flying blind to flying with a full-on dashboard.
Okay, so here's the absolute core of the issue. Your bank account, it's just a snapshot of your cash right now. It's got customer deposits for jobs you haven't even started yet, and it's not showing you the big payroll you've got coming up next week. But the profit and loss statement, your P&L, that's the real deal. That's your business's report card. It cuts through all the noise and answers one single crucial question. Did we actually earn more than we spent this month?
And look, to keep this from getting overwhelming, you really only need to lock in on 3 numbers every single month. That's it. First, revenue. Simple enough, that's the total money coming in the door. Second, and this one is so important, is gross profit. That's your revenue after you subtract the direct costs of doing the job. We're talking parts, materials, your tech's labor. This tells you if your actual work is profitable, before all the overhead. And then third, yeah, you still got to watch your cash on hand, because at the end of the day, cash is king.
And hey, you don't have to become a CPA overnight to do this, but here's a pro tip. Your bookkeeper's job shouldn't just be data entry. A truly great bookkeeper is a partner. They're the one who's going to call you and say, hey, did you notice your material costs are creeping up? Or you know that type of install we do? It's actually not as profitable as we thought. They're the ones who turn all those numbers into actual intelligence you can use.
Okay, so once you can actually see what's happening with your money, the next step is to control it. And that brings us to the big one, pricing for profit. It's time to move from guesswork to a real strategy.
All right, listen up, because this right here is one of the single most common and most costly mistakes I see in the trades. It's confusing markup with margin. They sound similar, but they are worlds apart. Markup is just how much you add to your cost. Margin, on the other hand, is the slice of the final sales price that you actually get to keep. They are not the same, and I promise you, getting this wrong will absolutely destroy your profit.
And let's make this super concrete. Check this out. You buy a part for $100. You think, okay, I need a 50% profit, so you add a 50% markup. You sell it for $150. Sounds good, right? Wrong. Your profit margin isn't 50%. Your profit is $50, but you have to divide that by the sale price of $150, and that is just 33%. See how that works? You thought you were making 50%, but you're only making 33%. That's your profit just vanishing into thin air.
So how do we fix this? How do we actually get the profit we want? Well, thankfully, there's a simple formula for it. First, you add up all your costs for the job. Step 2, you decide on the margin you want to hit. Let's say you want a 30% margin. Then all you do is you take your total costs and divide it by 1 minus your target margin. So for 30%, that's 1 minus 0.30, which is 0.7. You divide your costs by 0.70. Boom! You've just built your profit into the price from the get-go.
So what are we even aiming for here? What's a good target? Well, a healthy HVAC business should be taking home a net profit of 10 to 20%. And that's after everything is paid, all your overhead, all your costs, and yes, your own salary. If you're not in that range, that pricing formula we just talked about, that's your ticket to getting there. You got to remember, profit isn't just something that happens. It's something you have to plan for.
All right, final section. This is where we bring it all home. So, you know your numbers, you're pricing every job to be profitable. Now what? Now we have to protect that cash. We need to build the systems that create real, lasting financial health. And the very first system is for you. You need to pay yourself like an employee. I'm serious. Decide on a fixed, predictable salary for yourself, something reasonable. Then set up an automatic transfer. Every week, a percentage of your income moves into a separate account just to cover your pay. Why? Because it stops you from treating the business account like your personal piggy bank. It creates stability for you and for the business.
Next up, let's talk about everybody's favorite thing, taxes. Let's make tax season panic a thing of the past. It's actually really simple. You open a brand new savings account. You name it taxes, so you can't ignore it. Then every single month, you move a chunk of your income into that account. If you're not sure how much, start with 25%. Just do it consistently. Then when that tax bill shows up, the money's already there. It's just waiting. No more scrambling, no more surprises.
Okay, what about financing big purchases, like equipment? You have to think about this in terms of good debt versus bad debt. Financing a new van that's going to make you money for the next 5 years, that's smart. That's an investment. But financing a specific tool just for one short-term job, or worse, using a line of credit to cover a cash shortage, that's a trap. That's how you end up making payments on a tool that's been broken or lost for years.
And for real, true peace of mind, you need a safety net, a cash cushion. And here's your target number, 3 months. You want to have enough cash tucked away in a reserve fund to cover 3 full months of your operating expenses. Think of it like a shield. It protects you from a slow season, a truck breaking down, anything. This isn't extra money. This is absolutely essential for survival.
So I want to leave you with this one last thought, because it's probably the biggest mindset shift you can make. Stop thinking of profit as whatever happens to be left over at the end of the year. It's not random. It's not an accident. Profit is a choice. It's an intentional piece of your business plan, right from the very beginning. So the real question isn't what's left over. It's what are you going to plan to keep?